Hello and good afternoon. I welcome you to today's Trading Spotlight webinar together with Admirals. Today it's Friday, the 29th of September 2023, and we want to have a look at the earnings season. In fact, the last potentially hot earnings release was just released yesterday after hours with Nike. Numbers came in, well, I would say it's not that phenomenal. Let's say it's not a big earnings beat, but in fact, the stock itself, as we will see when looking at the charts, is very, very, very beaten down. And so what I mean with beaten down and how to measure that, that's a part of this presentation today. But the thing is, how can we trade this? So the stock is gapping up 10% plus. Right now, quite elevated volume already done in the pre-market. So it seems to me, at where it's obvious, in fact, that the stock is potentially hot for today. And I could really imagine the overall market with the bounce it has seen yesterday after being sold out from the Fed onwards. So we prepared for the Fed last week. You probably remember that. And the Fed came out as expected. We want to give it a little review today, what the Fed delivered, in fact, because it makes sense to give the overall market here also some deeper look, in fact. And so that being said, it's something to keep in mind when we formulate a thesis for today after the earnings in Nike, and I'm seeing the bounce here. So, or put it differently, if we are, let's say, if we're really bouncing, and if we see further bounce in the overall market, especially the spider in this regard, well, then potentially Nike is a long candidate for today. So long thing short, we have to hurry up, in fact. And by the way, what's up here? Why can't I just 1 second, please? Let me just okay, see. So I have to close this and have to reopen. I have to reopen the slide. So this is the chart. We will join the chart in a few seconds. Let me just here once again open my slide. So I'm taking it from there. So first of all, very important. So today it's a potential live trading event, and I will share not just my thoughts on the earnings in Nike and on the Fed and the overall market and the stock, but also it could be that we are formulating. In fact, I have two scenarios with me for today. That we are here also making a potential trading setup a topic. Please be aware that trading leverage products, and see if these are leverage products, that they are not suitable for all investors, and that you please make sure that you carefully read the risk disclaimer, understand all risks involved, and if you then plan to take a trade based on my plan, please be aware that this is no financial advice. It's purely educational, purely informational, and please download a demo, make yourself familiar with trading CFDs/leverage products, and then taking it from there. So very, very important. Let's quickly introduce Admirals. I think you probably have already checked out the website and registered via the website when listening here to these thoughts of from my end. But Admirals is an FX and CFD broker for over 20 years in the industry, offering over 8,000 financial instruments, fully regulated from SISEC, from FCA, from the ASIC. A very competitive offering when it comes to Euro USD and DAX, and also right now more and more focusing on the world and investment world, let's call it. So trading physical stocks is also potentially possible, and it's very, very interesting in this regard here to keep an eye on the Admirals Mobile App. With a very nice tool to calculate your position size. You have also a chance here to trade fractions of a share. In this regard, that's noteworthy because you might say, well, when looking at, let's say, a Tesla, for example, well, I don't really know. I want to start small. I want to invest, let's say, 100 euros or so, but the Tesla stock is trading at 250. Well, this is no problem because you can trade fractions of the share, which means in this regard, 0.3, 0.4 Tesla. In fact, you can buy them and invest your wished amount. And this is possible here with the offering. But this is not part of today's webinar. In fact, we want to focus on trading, really on not investing, but trading the US market opening. And as you can see here, this is my layout in the MT5. And you can see here, so I'm only focusing on Spider Qs. So Spider is the ETF on the S&P 500. Qs is the NASDAQ 100 ETF. And then I have Tesla and I have Nike here. This is exactly what you find here. So this is my trade panel. So this is the Supreme add-on. I highly recommend downloading this. By the way, let us just jump over here to the website, abnormarkets.com. Then check out platforms, and there you have the MetaTrader Supreme add-on. It's completely for free, and I highly recommend downloading it. Let me just look for the chat here and share the link. So I call it MT5 SE for Supreme Edition. And download it for free. Then you will find the so-called mini terminal within that. And the reason I have it here, especially this price ladder in this regard, is that I can directly and quickly trade out of the chart, which makes things much more easier to trade. Once you, for example, have the classic MT4, MT5, well, you have to open the platform, then you have to here check new order, then you have to find how many stocks you want to trade, and so on and so forth and so on, and then buy from there. In this regard here, you can quickly and easily put in orders with the price ladder, for example, buy stop, sell stop on the downside, buy stop limits, and so on and so forth. So very quickly, and in addition to that, you have also the opportunity to directly manage your positions. So long thing short, this is the trade panel. Then I have here a 30-minute chart, and I have a daily chart here. And as you can see, as I already pointed out, we are quite extended on the downside here. And how do I measure extension on the downside? There's also a tool here within the chart, within the so-called Supreme add-on, which is called Keltner channel. I don't want to have the Keltner here within this chart, because as you can see, I have also several moving averages to get an overall idea on where we trade. So for example, here in this regard, there's the 200 SMA, 200 SMA on a daily time frame. You have here 50 day moving average. We have a 20, we have a 10. Then there's some moving averages here on a 30-minute. It's not the same aggregation. For example, in black dotted, you have the 5-day moving average, which is the EMA 65 on a 30-minute, for example. And usually I would say, well, as long as we trade below the 5-day moving average, I want to be short. And the thing is, as you can see, well, we're quite obviously trading below that, but right now we are gapping above that, so potentially breaking this trend. It doesn't matter. It doesn't mean that we are changing course here now, but when looking, for example, from where we come and how far we went on the downside, well, obviously, there has been a clear advantage on the short side for quite a while now. And especially if you compare here the Nike chart, for example, with the Spider. So taking the Spider here, you can see, well, yes, we, by the way, let me just update it here. Well, the Spider came in over the course of August and also now quite weak in September. But overall, we are up for the year. So we started the year. Let me just probably taking this a little lower here. So taking it there. We started, by the way, this is March here. This is where we started the year, around 382 something, around 382, 383. And so right now we are up more than 10% for the year, the overall market. So Spider, this is the ETF on the S&P 500, while Nike obviously has seen a rough year so far. So this is where we started the year, somewhere here around 118. Driving higher and then starting to top out, dropping the 200 SMA. If you ask me, I think somewhere here that were the last earnings, can it be? Or was it here? I'm not really sure. But overall, there was a clear acceleration on the downside. And certainly one of the main reasons is the overall weakness in the consumer space, given high inflation. Consumption is down. We are about to head into a recession, or to put it bluntly, probably just say, well, just imagine you have a pair of shoes, a pair of Nikes, and well, you're right now looking into a difficult future, let's call it. So you don't really know, will I have a job tomorrow? Well, how are things going in terms of my salary? Well, how much do I have to spend on, let's say, essentials, like bread, or paying the rent, so I have to feed a family? So you look at your shoes and you say, well, do I really need a new pair of shoes? Or probably, well, these will make it another 6 to 12 months or something like that. So it sounds ridiculous, but this is exactly what you will see when looking at these stocks, and especially in the consumer space, consumer discretionary, we could also call that. For example, compare Walmart to Target, for example. So you see Walmart making new all-time highs while Target is sold off. And just I think there was a news over the week that they were shutting down something like 5-6 stores over the US due to theft and overall crime related Target store closures, I think we could call them. However, so the thing is that this is certainly also one driver lower here. I mean, we've seen that right now there's also a shift in terms of the overall we'll call it business model when it comes to Nike. Let's look at Nike CNBC. I Google, and then you have here the news, and there you have there we go. There we have the CNBC coverage of the earnings. So Nike misses on revenue for first time in 2 years, but stock pops as earnings and margins beat. So that's the main reason. So when looking here at the pre-market screener, what you will certainly see is Nike is ahead of the pack. Nearly 1 million shares being traded right now, gapping up 10%. By far the most active stock being traded, by far the strongest in this space, even though Tesla is traded slightly more, 1.8 million. Even though we have to say, well, why is Nike, let's call it, hotter than Tesla? Therefore, we head over to Finwiz, and there you can see it here. I already have Tesla open. Tesla on average has a volume for the last 3 months of 160 million shares. So having 2 million being traded in the pre-market, it's like, okay, yeah, it's active, but it's not that this is really hot. When looking at NKE, well, what you can see is there, on average, you have 7.6 million shares traded over the course of the last 3 months on average per day. And right now, already in the pre-market, you have 1 million shares being traded. So this is certainly, if you put this in relation, obviously a quite hot stock, given the earnings, no big surprise. And so again, beaten down. We focus on the beaten down part in a few seconds. Just give me a few minutes here to go over the earnings itself. And so missing on revenue for the first time, even though we have to say slightly missing. When scrolling lower, you can see it here, 12.94 billion versus 12.98 billion, while the earnings per share is significantly up, 94 cents versus 0.75 cents or 0.75 USD here expected. And then going in more depth, like how is China doing, and so on and so forth. You can really go very, very detailed here. The thing is, as you can see from the headline, it's also true that obviously all the cost cutting taking place right now, respectively reducing your inventory. That has been a topic with the retailers all over the world, or all over the US especially. So Walmart, Target, Foot Locker, Dick's Sporting Goods, and so on and so forth. They built inventory, and they weren't really able to sell it due to there was a massive shift in the overall consumer sentiment or behavior in general. So as I already pointed out, people said, well, I'm focusing on buying essentials. I don't want to buy shoes, or I buy them with a large discount. And this is exactly what's then pushing lower the margins, which obviously improved now. This is what the headline tells us, which is then positive for the overall stock. And this is resulting in some positive sentiment right now, and letting Nike perform better, let's say, in an overall also more positive environment. Coming back to the overall market, looking here, let's say on the spider, well, last week we saw a Fed coming out more hawkish than expected, let's say. What does it mean? Well, there was no change in terms of rates. They stayed the same, but the Fed kept its stance in terms of one further rate hike into the yearly close. So in December, there is now, given the dot plot, the so-called dot plot, there's another 25 basis point rate hike. Chances are high, still elevated. In addition to that, the dot plot for 2024, if you remember last week's webinar, if not, check out the a recording in the YouTube channel from Admirals. They raised their dot plot to now 500 to 525 at the end of 2024, which is, long thing short, a stance which screams something like it's higher for longer. So you have elevated rate levels for a longer period of time, which is something which is usually bad for stocks. And then we saw a bearish reaction initially, as I pointed out last week in the game plan we formulated together here, and then we sold off from there even further now, accelerating on the downside. And now the market, as you can see here in terms of the SPI, so came down to the 200 SMA and is now kind of bouncing from there. So we saw a quite bullish pop yesterday with a massive acceleration on the upside. Especially in the Qs, but also in the spider here. So it's not that we're bullish right now. So we're still trading below the 50 moving average, for example, 50 moving average. So given that, I don't want to be really aggressively long spider. Same is true when looking here at where we trade right now in terms of the 5-day moving average. So the EMA 65 on a 30-minute, we're trading around it. We are trading not above that. So as long as we don't make it above the 5-day moving average here, this black dotted line, I consider this to be a sucker rally, and not more than that, which is like meaning if I want to play the long side, I'd be very careful in trading it too aggressively, let's say. And so now coming back to Nike, so overall, still there's some bounce potential, probably some further on the upside. And so now what we want to do is we want to use this. This is Tesla. We will focus on Tesla later. So this is what we have here in Nike in the pre-market. So you can see buyers stepping in. How can I call this? This is the average volume weighted average price. The reason, by the way, I'm sorry, I put this out. Why do I look at a trading view chart now? Because I have the pre-market here. So as you can see, so there's obviously something happening right now, and it happened already yesterday in the after hours, but we're only focusing here on the spot market. So we don't have any information what's going on in the pre-market right now. And that's why I, as a professional trader, recommend using a charting platform like TradingView to get an overview of what's happening in the pre-market, also to get access to true trading volume. So we are trading leverage products, CFDs, which is awesome because we don't have any restrictions when it comes to like selling a stock short, for example. When trading a CFD, you don't have any problems there. If you're, as a retail trader, trading physical stocks, you most of the time you don't have access to selling it short, which is one reason why beside of your invest account, I highly recommend having a trading account beside that, because you might say, well, I'm having a investment here in this and that stock, whatever it might be, and it's a dividend strategy, and I don't want to sell it. I want to keep the position, but let's assume we have a year like 2022, market is coming down, and you want to hedge your exposure, but you can't because, well, you don't want to sell the stock because you still want to generate income. You want to collect dividends, but you're now seeing that the price of the stock is dropping. How can you prepare for that? Selling the stock short is not an option because you're a retail trader, but with a CFD, you could hedge your exposure. So that's certainly one thing to keep in mind. But again, so we want to focus on what volume is traded in the real market to really see, okay, is it a stock of interest for us? It is, as we already pointed out. We go through this checklist in a few seconds. But so we're currently seeing, okay, well, we are driving higher, obviously. And probably we are about to see at least a test of 100 on the upside, probably going even higher than that. But initially, probably we'll get to see a flush lower into the open. That's my first scenario, I would say. So going lower to 97, probably 96, that was a consolidation before we traded higher than in the pre-market now from around 1, 2 p.m. German time in this case. So in the pre-market already with obviously volume increasing here, as you can see there. So that's the first line in the sand. And the scenario is like seeing a dip on the downside, and then, well, we could to some extent call it dip and rip. So you dip into this region here. It's probably, let me just do it that way. And let's assume we're coming in now at around, let's say 98.50 or something. I will just dot the line in orange. Oh no, not orange. So probably let's do it here in purple. So this is our entry. Okay, so let's assume it's the entry. So just to have an idea on what I'm waiting for, and then what I want to see is like a dip down into this area, and then I'm not long here. I'm not going long, but what I want to go long is if we then drive from this area back through the open, like here, and then I want to see further momentum, probably up to 100, and that's a potential trade I'm looking for. So with potentially the stop here, probably even tighter than that, depending a little on the price action, but that's the scenario I'm mainly focused on. What I really like, this is a second scenario, but I don't want to see is that we straight go up in a line above 100, because risk reward wise, or somehow consolidating here and then pushing higher or something like that around 99, because the reason is this first scenario, which I just painted in here, is risk reward wise more attractive, obviously more attractive, because we have the momentum on our side already here. So, and we have further room to go. Let's say 98 up to 100 is 150. If we're coming in with a risk of 30 cents or something, we have a risk reward of 1 to 5, which is way more attractive than just going here and seeing bulls stepping in, because the overall sentiment and also the stock itself, even though it's very beaten down, I'm not really seeing it straight from the open that we get this scenario. But now coming back to the extension play. So what's extension? Keltner channel, I already mentioned it. So what I usually say, or what I recommend you doing, be very specific when it comes to like using words in your trading. The market is extended on the upside, on the downside. I, as a professional trader, will certainly ask you, what do you mean by that? And if you can't straight away answer that question, you have a problem. I don't care, but you should be aware of, you have to answer that question. You should be capable of really explaining what you mean if something is extended. If you ask me what I mean by that, well, I'm using with something you know as so-called Keltner channel. So what is a Keltner channel? In this case, it's working with here an exponential moving average. This is the blue line, 50. So you will see that if you look here at the chart, it's falling together with this green line, in fact. And then I say, okay, based on the ATR, the average true range, I will say, how many ATRs are we away? In this case, 5 ATR on the downside, respectively on the upside, from this EMA 50 on a 50-day moving average, EMA 50 on a daily time frame. So that means if we have an ATR as we have around 170 around, and I say I wanna see with this lower band here, what's 5 ATR away? It means 5 times 170. It's around 350. Then I look at where is the blue line trading. You can see it here on the upside. It's around 100, and then you just subtract 350. So that means 96.50 is the lower band, and as you can see here, we dropped already below that level on the downside in this regard. I'm sorry, no, it's around 5 times 170. It's $8. $8.50. I'm sorry, not 250. $8.50 or 350. It's $8.50. So it's 91.50 or something like that. So this is the lower band here. And then based on this ATR measurement, you say, well, this is what I call an extension. As you can see in the past, if that happened, if we get to see this extension for whatever reason, well, there was at least a chance of a short-term bounce. It doesn't necessarily mean that we will bounce from here, but right now, given the price action and given the news catalyst, well, obviously it bounced. And if we now can hold this bounce and can hold, in this case, above this, let's say, move lower here from around 2 weeks ago, and above 90, 96, 97 around, well, we're probably at least seeing a bounce back towards 100 due to being a psychological level. Now, first of all, let's just bring this back. So this is what I mean by extension. Now we have to first of all, hurry up because the market is about to open, and I have to update my game plan sheet here. 1.1 million, 10.34. That's what we have to type in here. I will guide you through this in a few seconds. We still have 5 minutes to go because the liquidity providers will keep stocks closed. 1.51202. They will keep stocks closed for the first 5 minutes of trading due to a potential lack of liquidity in this regard and having trouble to hedge their exposure. So that's the reason why you won't see any ticks here in terms of Nike. But what we can certainly do is, what we should do certainly, is focusing here on what the market will deliver now. And by the way, let me just take out here the Keltner because it's only interesting for me on a daily time frame. And then let's come in now. Let's also highlight the opening print. Let me just see where we come in. And by the way, now look at your here time. So 20 seconds from now, it could be, since it's NYSE listed, it's a NYSE listed stock. It's not a Nasdaq listed stock. Very interesting. You will potentially see that there's something to keep in mind because you will say, well, liquidity providers, well, don't they provide liquidity? It depends on the market makers, respectively specialists here at the NYSE. You will see that here. Let's go to a 1 minute chart. So you can see no volume coming in right now. Go look here. So usually you might say, hey, it's 3:30 German time, so market is open. No, it's not yet open. It's not yet open because you can see the volume is not coming in because the specialist says, well, there's potentially a big, now it's open. Now you can see that, okay? You saw that was when the spike happened. That was when the specialist opened the book or opened the doors, let's say, to some extent. And we have to, by the way, highlight it to have the opening print here. So that's the opening print based on what I just printed in here. Right, we want to see a flush now, and then a straight drive back through the open. So that's what we are focusing on. And so the thing is, if you have a big imbalance of buyers and sellers, given that there was an earnings release, well, the specialist has to make sure that he is not in the position to take anything or everything in terms of risk on his side, but he wants to make sure that there's enough market participants he can match then so that he can easily and nearly risk-free open trading in the stock. So now liquidity provider, just imagine that liquidity provider who's referencing here on the NYSE stock in this case, and then there's no one really providing liquidity. So to avoid any problems here, you just say, well, I keep out the first 5 minutes of trading and then I take it from there, just to give you an explanation of what's happening there. Then we have the flush. Now let's see. What we then will want to see is a back through open back. So this is exactly the scenario I was pointing out here. No need to take action, by the way. No need to hurry up. We just have to wait now. I want to guide you. Well, we can certainly focus on the price action right now, but probably it's even more interesting here to give you an idea. We focus here on that. I have a second backup plan for Tesla if Tesla comes in. But let's first of all focus on Nike here. So this is a sheet, an Excel file, which I fill in every day to have an overview of support and resistance levels for the day, which I highlight also here in the chart with these horizontal blue lines, as you can see. Then you have, that's by the way wrong, you have a potential inflection anchored volume weighted average price. When I trade earnings, you want to know what is the price which was an average paid from market participants after the news catalyst was released, the news were released. I don't need to fill it in because it comes in quite here at this level around 95 around. We could probably highlight it, but the thing is that in fact I don't want to see the stock drop to this level here, but finding bids, buyers around 97, probably slightly flushing below that, but I don't want to see it drop back to 95 in fact. Then I have the news here to highlight that. And also I already get it quite specifically here, technically very extended, given what I just explained to you based on the Kaltner channel. And then bounce with overall market to 100. We've nearly seen that already in the pre-market. So potentially is a retest of the pre-market highs. And then I have a game plan here. Simply, I'm going through. So here's some fundamentals in terms of the stock, the gap, the average daily trading volume. 7.58 million. You have pre-market volume 1.18 million. You have an ATR 177, so nearly 180. We worked already with that in terms of the Kaltner to explain it, where these lines come from. Short percentage institutional ownership, we can skip that in this regard. That's of interest for us if we want to play something like for example, short squeeze, like in a Carvana, whatever. So we can keep this out here because this is a classic value stock, blue chip. So no surprises here at this end. And I use all this information to fill this into my trading journal and then have an opportunity to really go through this trade once again, especially after some time, and really focus on details in terms of were there any circumstances, something which was of interest. So very high pre-market volume, for example. I found out, for example, that especially if I have a stock which has a pre-market volume of 50%, sometimes probably a little lower than 30 to 50% of the average daily trading volume based on whatever news, but news, most of the time it's a very hot news then in this regard, that these have a higher tendency to see very strong momentum drives, even then if they are to some extent kind of a value stock, for example. So that could be kind of difficult for today. And then I have a game plan here. And so, in fact, it's the second scenario, which I can already highlight here due to the flush we've seen already. If flush into the open, but holds 96, 97 and back through open, then I want to be long, target 100, probably plus we can add here. And then I want to trade this 100% on a momentum basis, which means I want to go long on a M1 time frame, so minute, and then manage the trade accordingly. This approach which I use for momentum plays. So you can see here EMA 9 and EMA 21. You then want to trade the long side with these, but we can keep them out because then I have too many lines on the chart. So now you can see we flushed exactly into this area, but there's no need to action for us because I say, well, right now, as you can see here, we are right now holding this area, which is good, but we are not really driving back through the open as of now. And I want to see that, in fact, within the first 50 minutes of trading. So we have 10 minutes left. That's a really like opening phase trade scenario based on momentum. If we don't get to see that within the next 10 minutes, it's not an option for me anymore. That doesn't mean that I'm not trading the stock anymore, but I'm not trading it based on this, but I have to reformulate a plan in this regard. So that's also something noteworthy. But again, I have a backup plan. And the backup plan, well, the backup plan, unfortunately already played out to some extent. What do I mean by that? Well, this is to some extent a problem now. I have to reformulate the plan. So Tesla has seen a strong run yesterday, especially following this little sell-off below 240 on Wednesday. I had a very important region of support there. Let me just open here the chart. I have it already prepared. So, well, we have a very, very important zone of support. Let me just see. I have to zoom out a little so that you can see that here. So that was a very, very important support area. And we held this at the beginning of this week, and then we flushed lower with the overall market. It wasn't Tesla based on news or something. What's the overall market selling out? And then we bounced quite heavily on Wednesday. We don't want to dig too deep into why it was significant, but there were signs. There were signs that potentially the bottom is in, and that Thursday will be potentially a move higher, especially in the Qs. In fact, I traded the Nasdaq long yesterday, when we broke back above 14,600. Is it right? 600, 620? I think so. And the line in the sand for me was 14,500 points. But we're not going into details here right now. Yesterday was strong, and now today we're gapping higher above the highs we made on Monday, new weekly highs. You have to remember, that's something I already pointed out here in my game plan. I'm aware that there will be Tesla deliveries on Monday pre-market. So 1 hour before the market opens, Tesla will deliver Q3 deliveries for their Tesla Model 3, Model S, Y, and so on and so forth. I'm not really sure if this is really a potential big event, but it's certainly something market participants, especially short-term traders, will focus on. So keep this in mind. Potentially, we get to see kind of a drift into that or drive into that, then selling out due to a disappointment or the other way around. I don't want to hold a position overnight. That's for sure. At least short term. So if you're an investor, you keep the position, certainly, because that shouldn't affect your overall investment thesis, the deliveries for the third quarter. But if you're a trader, you don't want to swing over the weekend now. And then you can, I highlighted here, it's a technical play, so there's no news involved. And then I say, well, I think that we are potentially headed higher into the mid 250s. We have today the quarterly close, and you can work with something I use usually as a reference point for the month. In this case, on the upside, a month to date volume weighted average price. So you can see here, there's two purple lines, in fact, coming in, and the purple lines on a 30 minutes time frame, you can spot them way better. They result out of the fact this is here, this is this line. This is the monthly date anchored volume weighted average price. So the price which was on average paid from market participants over the course of the month, September. And then you have here the highs around 280 after this Adam Jones upgrade. I anchored a VWAP too. And you can see the area is around 255, 56, 58, somewhere in here. I could imagine that the market drives potentially into this area if there is kind of a momentum drive, given the current bounce in the overall market. And so based on that, I say, okay, it's my backup plan if Nike is not playing out. As you can see, Nike has trouble. So, well, we are now fighting to move back above the volume weighted average price. Probably 5 minutes to go, probably good, but let's see. So I need buyers then. I need a strong drive back through the open. Tesla is certainly a better candidate here in terms of momentum plays. That's interesting now, what we get to see. The thing is, you can see we see a flush here from around 250 down to something like slightly below 249. And here, this could have been a momentum play, even though we would have been out right now. So with a drop below the volume weighted average price, you're taking out the position break even. So you're not holding it anymore, because what you want to see is what I pointed out here. I said, if flush into the open, but holds 248, respectively, yesterday's highs, and this is exactly what we got to see. You can see it here. So these are the highs from yesterday. We flush, but we hold above. And you can see, and back through open and back through 250 in this regard, then I want to be long with a target 255 plus. This is what we get to see. So here, the flush, we drive back through the open. So very quickly, this is the first 4 minutes of trading. I want to see it within the first 50 minutes of trading, but here the market is not yet open. So that's the problem then. You have to skip this trade then. And then you see, well, we drive higher, going up 255, 52, 2 points in the money, but taking no further momentum on, but having trouble to hold above 251 here, the pre-market highs. And this is a reason then to say, well, I have a momentum trade here. I want to see momentum, buyers coming in and pushing us, and here holding then above the pre-market highs. If we don't hold, well, the momentum trade is over here, at least very short term. So we are talking really about the first 30 minutes of trading. We're really focusing here on trading the opening, if you want. And so, yeah, that's in fact it. On Tesla. So Tesla is not of interest for us anymore, at least not as of now. Let's probably see, there will be some buying coming in together with the Qs from yesterday. So right now, very choppy action. Could be that we are probably breaking above 62 and have some further room on the upside, which would be a clear sign that we can hold above yesterday's highs and probably extending the move a little on the upside. In terms of the Nasdaq, I would say, well, we probably 15,000. So probably you have further room on the upside. What is this equivalent in the Qs? Probably up to 365. Somewhere around there. I don't know. Coming back now to Nike. If we adapted the plan, okay, now it's too late. I'm sorry. Well, now it's too late. It's too late because I could say, well, probably we buy a first feeler here. We hold volume weighted average price. It's not very giving us many clues, but probably I would say, well, probably risking against the 970.50 here for first small bid in terms of position, and then adding here with a drive back through the open if we get to see that. That's probably also a way to play. Currently, as you can see, we can hold 97.50, which is good sign. Driving back through the volume weighted average price, probably. Well, we would split a position. If you take 100 shares, that's the risk you're willing to take. You buy probably 50 shares in the current area. So with the signs of 97 holding, risking against 970, 9750, and then taking the other 50 once we drive back through the open, and then having a quite attractive average price, even though that's like really a very aggressive trading. I'm not really sure if I want to see that, because it's an idea. It's just an idea. Let's put it that way. Let me just, by the way, focus on the questions. By the way, could you share your opinion what we could expect from the news about the government shutdowns on Saturday night? Could it happen, or is it just a bubble? To be honest, no one cares. No one cares. If you hadn't mentioned it right now, I wouldn't even had it on my radar. So it has been a topic for so many years now. I remember that 10 years plus ago, it has been a topic and everyone was going crazy. And then we see that and the bounces and up and down. And at the end of the day, well, they find a solution in some way, because it's politics, what's happening there right now. So especially with the Republicans, if I'm not mistaken, they have the majority in the Congress, no? So Democratic president right now within an impeachment trial. No one knows about that because the media is not covering that, especially not the mainstream media, let's say. But the thing is, so there's now tensions building, especially also with all these stories, I think, around Hunter Biden and the laptop story. I really don't follow it at all. But I could imagine that this is right now a fight behind the scenes, and they will find a solution. They have some kind of agenda they want to push through, Republicans, and then put pressure on the president. Well, give us this, and then you get the okay for that. And but no one really cares. At the end of the day, they will find a solution. That's as usual. It's the case, and that's why no one really cares, because it's baked into the price. So that's why I would say it doesn't really matter, especially not for us as short-term traders. So that's certainly something to not keep a close eye on. Let's say that's probably a good way to sum this up. And yeah, so in fact, that's it for today. So we haven't seen a trade. Unfortunately, I still hope you just got an idea on how to game plan for the day, think yourself into the market, have a clear vision idea on what to expect, what numbers are of interest, how to find levels, and how to then also find potentially hot stocks for the day, given the pre-market volume especially. You could say, well, every stock is hot, and then some might probably say, I'm only trading Tesla or I'm only trading Nvidia. But the thing is that especially given potential catalysts, you can really find very juicy, very interesting trade opportunities given news releases, in addition to the potential interpreting these news releases then and to find or formulate an investment thesis. You shouldn't formulate it only on one quarterly news or earnings release, but that certainly makes sense to combine that, let's say, trade it and invest with it. And that's it from my end. I hope you learned something. If you're watching this on YouTube now, subscribe to the YouTube channel, leave a thumb up here. If you have questions, please follow, ask them in the chat box below. And that's it from my end. So all the best. Happy trading. Watch your stops. Have a nice weekend. Enjoy yourself, and talk to you next week. I look forward to it. See you. Bye-bye.